What's up, good people? My name is AJ, and you are watching Straight Talks. Talking about a topic today that I'm pretty excited about because I think it's one of the most underutilized financial tools that people have out there in the world, and I just want as many people as possible to hear about this, learn about this, and hopefully implement this strategy in their own lives. The general theme here is going to be saving for retirement, and I've made another video about how to make $1 million, and this is going to pertain to that too. But specifically in the United States with the type of account called a Roth IRA, and I know in other countries there are similar tax advantaged accounts that you can save money into to invest for your future as well. I could get all into the weeds on what types of investments you should be utilizing and in what weightings and why, and I'm going to have other videos kind of about that topic, but just for right now I want to be more generic about how a Roth IRA works and why most people should be using one. Two, just on the topic of getting this information out there, I cannot believe that this isn't taught more in schools, specifically high school. I don't know if it needs to be like an accounting class or a financial literacy class or something like that, but you just get way too many people who don't even know that Roth IRAs exist. They don't even know what types of retirement accounts they should be using. So when they're 22, 23, 24, 25, whatever, and they start earning a fairly consistent income, they're just not utilizing these things. And then by the time they're 30, 40, hopefully maybe not even 50 years old, it's kind of too late. So these accounts are best used when you're young, when you have a lot of time on your hands, because your money will grow more efficiently, and for another reason that I'll mention here. But I just can't believe how little awareness is put on these types of accounts. So please go ahead and like this video, leave a comment down below, and subscribe to the channel so as many people as possible can check this out. Even if someone is a little bit older and they're still eligible to use a Roth IRA, in most cases, I would say it probably might be a good idea. You need to consider it for your financial plan specifically. But I say that it's better implemented for younger people for two main reasons. Number one is the most obvious, and that's that you have more time to invest the money and you'll be able to take more advantage of the compounding interest that account will see. So the best example is that if you start when you're 20 and save up until you're 60 years old, you only need to put in like $200 a month at an average annual return of 8%, which is pretty realistic. The stock market's actually averaged closer to 9 or 10% in recent years. And you'll have $1 million when you go to retire. In that example, you'd actually contribute $96,000 over the course of your lifetime, but you'd have $1 million at the end. So you've made $900,000 just by the power of compounding interest and buying a stock market investment fund, which is fairly easy to do if you just spend a little research on it. And the second one is that the Roth IRA is an after-tax account, meaning your money gets taxed from your paycheck, it goes to your bank account, and then you contribute to the Roth. This differs from a 401k because a 401k is pre-tax. That money never actually gets taxed. It goes directly in your 401k, it builds up, and then later in life it'll get taxed on the back end. But a Roth is taxed beforehand, and then it builds and grows, and you don't pay taxes later on all that investment growth. The reason that it can be better to do it when you're younger is that you're most likely in a lower tax bracket because you're earning a lower income when you're in your 20s and 30s relative to your 40s and 50s. So it's more advantageous to pay a lower tax bracket on that money now, let it build up in the account tax-free, and then later in your life when you're in your 60s or maybe later in retirement when you might be in a higher tax bracket because you're enjoying a higher level of lifestyle, you're not paying the taxes at that higher tax rate that you would be subject to. So do it as early as possible, maybe 18 if you can. I just want to reiterate the fact that I'm talking about doing $200 a month into this thing. I personally do $500 because there's a manual maximum limit of $6,000 a year, so $500 a month gets you there. But if you can muster up $7 a day, which is what some people spend on going out to eat for lunch, and I have other opinions on spending money every day going out to buy lunch rather than packing your own lunch, but that's a different video. It's like $6.70 or something like that per day that you have to put away into this account to have $1 million in retirement. This is such a no-brainer. Even if you're making minimum wage, you can probably find a way to reduce your expenses enough that you can get $7 a day into this Roth IRA and have $1 million later on. That's going to totally change what lifestyle you're able to have for the rest of your life, and then probably give you a lot of money to pass on to your kids and grandkids or set up a trust, whatever you want to do then. I think this is such an important topic to make $1 million off $7 a day, tax-free, by the way, $1 million tax-free. Everyone should be hearing this, and if you can implement a Roth IRA in your own life, again, look at your own financial plan, learn about the specifics of a Roth IRA before opening an account. But if you are eligible and you think it makes sense, then I encourage you to do so. And I'm using this age 60 as a timeline because this is a retirement account in the United States, and you can't actually access most of that money until you're 59 and a half years old without paying a 10% tax penalty. So the idea here is to set it and forget it. That's why you want to use a simplistic investment option. You just put your $200 a month into the account, more if you can. Buy the same investment option every month. Don't really worry about it. Don't ever look at it. Don't change up your mix there, and let it run until age 60 when you can actually access that money without paying tax penalties. And you'll be a Roth IRA millionaire. I'll just hit on that point too one more time, which is that it's best to set this and forget it Don't even look at your statement in the mail. Whatever broker you choose to go with, Fidelity, Vanguard, Schwab, doesn't matter. They're all fine. Just set your statements to get emailed to you, so it just piles up in your inbox and you delete it at the end of every month. So you're not even looking at the investment, how it's doing. If there's another pandemic or a nuclear bomb goes off and the stock market tanks, you don't care. Actually, you'd appreciate that, because if you're still saving into that account and the market's depreciated, you're buying more shares at lower prices. A lot of studies show that you're only going to hurt your long-term investment performance if you're getting in there and tinkering around and trying to time the market and buy this and sell this and short stocks and buy ETFs or whatever else you might be doing. Just forget about all that unless you're really an investment expert. Maybe if you're a CFA charter holder. For 99% of people, it's going to be best to set a fund, forget it for 40 years, and just have $1 million later on. If you're watching this and considering maybe setting up this Roth IRA account, I really want you to just spend 10 minutes or however long it takes you, figure out the rules for eligibility into a Roth IRA. Most Americans are eligible. And set an account up. Spend a little bit more time or watch one of my other videos to decide what indexed or mutual fund you want to buy in that Roth IRA account. Literally add your bank arrangement and never worry about it again. It will be one of the best decisions you ever make in your life financially if you get this going today. Here's my last point on the tax favorability of this type of account, and I've already talked about how it's just tax-free money. So when it comes out, rather than paying 20% federal income tax, you can imagine if you had $1 million in a 401k, you realistically are going to get $800,000 out of that, and $200,000 is going to go to taxes. Well, if you have $1 million in a Roth IRA, you get the whole $1 million. So right away, you pay much less in taxes. But what a lot of people don't consider is the fact that the distributions from your Roth IRA are not taxable as income to you. What that means is that it's not bumping you into a higher tax bracket. So again, with a 401k example, now that's a pre-tax account. If you have $1 million in a 401k and you're taking out $100,000 a year, that counts as $100,000 of income. And so the IRS is going to say, oh, hey, you, Mary Smith, you have $100,000 of income. Your tax bracket is X. And maybe it's 20% at the time, like the example I just gave. But if that money's in a Roth IRA, and if you can supplement your income from your 401k with your Roth IRA money, whatever portion of your income you draw from the Roth IRA is not taxed to you as income. It's not even counted as income. So it does not increase the tax bracket that you're in. Just to illustrate that point one more time, if you only had a Roth IRA and you're drawing $100,000 a year out of it in retirement, your income is going to show as zero. And you'll have Social Security and other things if that's still around, but at least from your retirement account distributions, you're going to have no income, and so your tax bracket's going to be minimal. And even for other types of income like pension or Social Security or 401k that you might have, that income is going to be taxed at a really low bracket, since your retirement account distributions are not counted as income for you, and so they're not pushing you up into a higher tax bracket. So really, these accounts are used well when supplemented with other types of income. Everyone should probably have a pre-tax retirement account too, like a 401k, because you're probably not going to have pension and maybe not Social Security later on. And you are going to be so thankful that you have this Roth IRA account to effectively manage your tax bracket later on in retirement, and you'll be able to decide how much income you want to draw each year and what kind of taxes you want to pay. So listen, if you think this video helps you out at all, do what I mentioned earlier. If you think this could apply to anyone else that you know, please share this, like this video, and let's get more people signed up in these types of accounts. Thanks for watching.